Hello and good afternoon, everybody. Thank you for joining me on Earning Time and Money. Today, we're going to be going over a 401k comparison and an IUL comparison. And what we're going to be doing is we're going to be showing you the difference in what an IUL could do for you as opposed to a 401k. So, in this situation, you have your 401k plan. The current age that they're starting with is age 35. The age of retirement is 65, so it's a 30-year period. The income tax is going to be set at 25%, and the annual contributions are going to be $20,000 with an annual rate of return of 7.5% and the fees of 1%. As you can see down here, the total contribution, excluding employer match, is $600,000, and the total account value at 65 years old would be $1.839 million. If you go over here to the IUL, the current age starting at 35, the age of retirement is 65, using an income tax rate of 25%, annual premium of 15,000, a lump sum of zero, and an annual rate of return of 6.83%. And the total premiums paid would be $450,000 at age 65. So again, we're using 25% less income for the IUL than we would for the 401k, with the total account value being a little bit less than the 401k at $1,637,000. Now, if we go over here to retirement income at 65 years old with a 25% income tax rate, we're going to need $165,840 to be able to withdraw $124,380. Okay. If you go over here to the IUL at age 65, you're going to be drawing tax-free income of $124,380. Okay. Now your total contributions for the 401k is 600,000 over that 30-year period, and the total contributions for your IUL is 450,000 over that 30-year period. Now that 124,380 on the IUL is the same as the withdrawal amount on the 401k. But if you look down here, as you start to withdraw money from your 401k, you go up in years, you go all the way up to 72, the account's depleting, all the way up to age 80, your account has completely run out of money. Now, on the IUL, you're starting at 65, you're taking those $124,000 withdrawals, you start to go up, your account still has money, you reach age 80, the account's still going, you're still collecting that $124,380, and it just continues on up to age 100 years old in this scenario. Okay. Now, if you go on to the taxes, at 65, you've contributed $20,000, tax rate's 25%. The annual tax is deferred $5,000. Your annual tax deferred before retirement is $150,000. So $150,000 has been deferred over 30 years. The annual pre-tax retirement to get that number again is $165,840. The annual spendable income in retirement is $124,000. So your total taxes deferred are $150,000 at age 65. Tax rate's still the same. And if you go down here and you start to increase the taxes, you can see that after 4 years, so at 69 years old, you've already paid more in taxes than what you've saved. Now, if you continue to go all the way up until age 80 when you've ran out of money, you can see that you've paid $471,900 in taxes. Okay. Now, on the IUL, everything here is the same, okay, except for the $15,000 less income contributed. We're using 25% less in this scenario than we're contributing to the 401k. And since you've already paid taxes of $150,000. Okay. Now your annual spendable income is still the same at $124,380. Your total taxes paid before retirement, again, $150,000. Your tax rate is zero because you're not paying taxes on this income. So if you look down here, if you start to increase this, your fees in an IUL, they're actually front-loaded fees. Okay. And in a 401k, your fees are lower up front, but they're higher in the end because you're paying more on the total value of the account. So if you continue to go up here, your fees, if you look at this, you go all the way up to age 80, total income tax saved is $621,000 as opposed to paying $471,000 of income. And obviously, as you keep going up, total income tax saved, if you live to age 90, would be $1,036,000. Okay. Now, again, we'll go over the fees here. So the annual fees, okay, start off at $215 for the 401k. Everything here is still the same. Age 35, retire at 65. Annual contributions of $20,000. The annual rate of return is 7.5% with 1% fees. And then you go down here and your fees are $215. And as you go up, those fees continue to go up. And then obviously, as you get closer to retirement, the fees start to drastically increase and just continue to go up and up and up until age 80 when you run out of money. So the total fees that you've paid are $401,000. Then you go over here to the IUL. The current age is 35. Age of retirement is 65. Everything is the same. 15,000 a year in annual contributions. The annual rate of return is 6.83%. Annual fees start off higher. So again, the fees are front loaded in an IUL, but then as the IUL starts to perform and starts to progress and the years go on, the fees actually start to drop. So as you can see here, once you get into retirement age, your total fees paid are only $101,000 at age 74. At age 80, they're 133,553 compared to the 401,682 in fees. So, as you can see here, an IUL drastically outperforms a 401k. And anybody that's thinking about purchasing a 401k or contributing to a 401k should absolutely look at an IUL, properly structured IUL, because not all IULs are structured properly. For more information, you can reach out to me. The information will be in the tagline below. Thank you very much for listening to everything today. I appreciate your time and look forward to seeing more of you in the future. Everybody have a great day. Thank you and God bless.